Hello to you all. I'm David Gerard and this is Pivot to AI. Today, we're doing the PitchBook NVCA Venture Monitor for Q1 of 2025. There's a lot to cover here today, but this will be a banger. Venture capital is, to be clear, screwed, and I'm going to tell you how it's screwed. A bubble in AI is their last hope, and they're betting everything on Sam Altman coming through. It's heartwarming. This report is the National Venture Capital Association telling its members how things are going. It's the view of VC from the inside. The front cover picture is the light at the end of a tunnel, and it's an oncoming streetcar, and that's absolutely the tone of this report. We covered the third quarter 2024 report last year. That one tried very hard to present bad news as okay news. The new report can't even do that. Here is the state of venture capital in early 2025. Venture capital is moribund except AI. AI is moribund except OpenAI. OpenAI is a weird scam that says it wants to burn money so fast it summons AI God. And nobody in venture capital can cash out. The report mostly blames this on President Trump and his tariffs. But VC's problems are systemic, and you could see them all coming since the zero interest rate era. And they have no idea how to fix this. None at all. The report's only plan for the future is they cross their fingers and hope. So Trump's tariffs have trashed everything. The Trump economic disaster is the most important material fact for the venture capital sphere. The report goes on and on about the tariffs. Here's the very first paragraph of the whole report. With uncertainty dominating US financial markets throughout the first quarter, our prior expectation that 2025 would see a resurgence in venture capital, liquidity and deal-making has been dimmed. Should the latest iteration of tariffs stand, we expect significant pressure on fundraising and deal-making in the near term as investors sit on the sidelines and wait for signs of market stabilization. What this translates as is nobody is doing deals because business can't make plans past lunchtime. The report somehow fails to mention the bit where the Silicon Valley VC and executive crowd worked their backsides off to elect Trump, and a lot of them sat in the front row of the inauguration. Then they were actually surprised when the leopard ate their faces too. Now, the end of zero interest. I said that VC's problems are systemic. Trump is just the last straw. But VC is just hilariously unable to cope with not being in a zero interest environment. So, in 2008, the global financial crisis meant interest rates went below 1%. Because central banks use interest rates as the brakes on an economy. So they took the brakes off completely to make sure money kept flowing around. And interest stayed near zero for over a decade. But zero interest meant that if you had to get returns, say you're a pension fund, then there weren't a lot of places to invest. Venture capital was one thing you could put money into and maybe get a return. This meant a flood of money into the startups, and that meant all sorts of ridiculous startups got funding, businesses that lost money on every transaction. SoftBank was setting money on fire as fast as possible, ending in the disaster of WeWork. Borrowing money was almost free as well. Why not load up on debt? But then inflation came back, and the Fed put interest rates back up, and suddenly there was less money. Why put money into venture capital when you could just get back 5% buying treasury bills? We had venture capitalists before 2008, including a lot of the current guys, but it's like they completely forgot how to do anything without free money. The party's over, and now it's time for the hangover. So we get hyped up tech bubbles praying for lottery-level returns, because ordinary business returns from, say, making a thing and selling it don't cut it. Our present hype-fueled AI bubble is a complete, worked example. Everything is open AI. What are the VCs putting money into this year? They're all in on AI. Crypto's still dead, quantum isn't taking off, AI is the last game in the casino. There's lots of graphs in this report showing healthy dollar amounts, but these are mostly one deal, the $40 billion OpenAI deal led by SoftBank, and then the other AI startup deals. Almost all the graphs and statistics in this report are lies based on treating the one huge OpenAI outlier as if it's normal. Andreessen Horowitz, A16Z, is right now raising a fresh $20 billion investment fund to try to keep the AI bubble going. VCs still believe the marketing brochure version of AI because they don't actually know anything about technology. Quote, "Just as internet evolved from buzzword to business backbone, AI is following the same playbook." No, it isn't. A completely different thing taking off and working says nothing about if your personal favourite thing will take off and work. Stop saying dumb things. PitchBook says 57.9% of global VC dollars invested in Q1 went to AI and machine learning startups. Most of that's OpenAI. Even PitchBook calls it FOMO, fear of missing out. AI is the only prospect for a lottery-level win. You and I know that's not going to happen, but the VCs and their customers, the investors, do not know that. They're still in, because where else are they going to go? Everything that isn't AI is moribund. There's a world of startups outside AI, and in 2025, they're not having fun. Investors do not want to put money into early-stage startups with nothing to show as yet. Quote, "First-time financing activity remains low, reflecting broader trends across the VC industry. In Q1, we recorded $3.8 billion invested across 892 deals, which was down both quarter-on-quarter and year-on-year. Only $10 billion was raised across 87 VC funds, setting a pace for the lowest year of fundraising in a decade. Early-stage firms that do get venture funding tend to get acquired early on, instead of doing more rounds to pump their imaginary value number first. Even when a VC fund gets investors, it can hardly find anywhere to put the money. One VC firm, Charles River Ventures, returned uncommitted capital to its investors late last year, and wasn't that a shock to the world of VC? One really important rule of venture capital: number must go up. Only up. These companies have mostly imaginary valuations. Say you pay $10 million to get 1% of a company, that makes the company worth $1 billion, right? And not the $10 million of actual money it's got. The VCs jealously guard these imaginary valuations as big fat book entries that they can trade with each other, because you don't really want to test what the market of actual dollars thinks the real value is. A pile of startups just ran out of cash and died in 2024, more than just died in 2023, and 2025 is expected to be even worse. A lot of these were, frankly, trash startups funded a few years ago, and they should have died long ago. Dead startups walking. But VC still had the company's imaginary value numbers on their books, and they didn't want to admit the startups were worthless until they were forced to. Why? Because nobody can cash out. AI is the only thing that's catching the eye of investors. The investors don't want to put their money into other areas because they're just not getting payouts. Here's how the payouts work. The simple version is: a VC firm starts a fund. Big investors, pension funds, insurance companies, sovereign wealth funds, super rich family offices, put money into the fund. The VC firm puts the money into startups that will progress to an exit, an initial public offering or a bigger company buying them out, and the investors get paid. Hooray! Most startups fail, but one big winner can make up for a pile of losers. Unfortunately, the stock market is broken. The Trump tariffs again. So IPOs are not popping on launch, so they're not happening. CoreWeave, riding AI buzz for all it was worth, was the big public exit in first quarter 2025, and that one fell flat because their numbers were objectively terrible and their business plan doesn't actually work. Ed Zitron went through CoreWeave at length in a blog post. But even with all that, CoreWeave on its own was 40% of all first quarter exits by value. It was the big one. Is the outlier, not the normal thing. The other big exit was Wiz Security getting bought by Google. But as the report says, quote, the rest of the exit market has remained relatively silent, unquote. Funding rounds are increasingly late stage. That is, VCs mostly put extra money into their existing startups, often just to keep them on life support. Many of these later funding rounds also have secondary sales, where the startup employees get to sell some equity to new investors, because then the talent might not give up and quit to work somewhere that isn't a zombie. And the old investors get a bit of money back from a company that's not going anywhere or doing anything. Let's sum up now. Given all of what I've just said, what's the future of venture capital? This report's theme for the future is hope really hard. That's it. Maybe markets will recover and IPOs will pop again. Maybe Trump will come up with a coherent economic plan and stop being volatile and weird. Maybe. That's it. That's all they've got for a plan. These guys haven't got a clue what to do next. They really don't. This report is the industry talking to itself and saying, well, gosh, chaps, looks like we're screwed. It's very important to note something else here. Quite a lot of the venture capital class are not actually so bright, but they got lucky once. Now, that's a big thing to say. They're way more rich and successful than you, David. These are intelligent and educated people. A lot of them have PhDs. They were definitely good at something. But also, it's horribly clear that right now they're way out of their depth and floundering. Semaphore documented last week how these guys enthusiastically joined a long-running billionaire group chat with literal neo-Nazis as their court philosophers. Mark Andreessen got into E/AC, which is quite literally a neo-fascist revival movement. This is not smart behavior. This is dumbass behavior. These are not people who can be trusted with dangerous machinery such as billions of dollars. They were lucky as hell, and now they're not. The only future plan in this report is maybe Trump will stop being a bizarre freak. They've met the guy, and they think that's a plan. Maybe they can start a bubble in guillotines. Not that anything unpleasant should happen to any of them. None of the VC class will ever miss a meal. But you and I can feel a small amount of schadenfreude at their mild discomfort, while everything burns around the rest of us. Thanks for tuning in to Pivot to AI. Please, if you can, tell one other person about this episode. Post it on your socials. Like and subscribe on YouTube. Put a nice review on the podcast apps. I have a Patreon where you can fund work like this. And I put one of these out every single day. That takes effort. So, see you tomorrow, and bye for now.